for today's show. Just before we get on to our guest presenters today, who will include Lenka and Ash. Lenka will be talking about her currency watch list, and Ash will be talking about the famous FTSE, of course, and we will also have a little look at what I'm looking at for the week ahead as we get into the show in the latter stages. Before we go to Lenka, I just want to share briefly with you what is coming up in the week ahead. And it starts very, very quietly, of course, with a bank holiday in the UK tomorrow for obvious reasons, where the Queen will be sent from the world. It's her funeral tomorrow after, wow, what a whole week or so, 10 days it's been since her passing, and it culminates tomorrow with the funeral, of course. Tuesday, a little bit quiet. Wednesday's a little bit quiet, but look out, here comes Super Thursday, and we've got no less than 4 central banks showing us their intentions in terms of monetary policy for the upcoming session, whatever that may be, 6 weeks in some cases, 4 weeks in others, but it should be very, very interesting as we get all of that information throughout Thursday. Wow, what a day it will be. And then, of course, we've got some manufacturing numbers on Friday. So I think probably if you want to get in the market, a good time would be prior to Thursday and hang on like no tomorrow as those bank or central bankers tell us what they think. Not sure how that's going to affect Lenka's watch list. Let's check in with her and say a big hello. Hi, Lenka, how you doing?
Hi, Geoff. Hi, everyone.
How's things up there in Sydney town?
Sydney's good. I just had dinner, so I had to sort of rush that a bit because we were running a bit late here with the family. But all good.
Okay. Sunday
I'm
roast.
feeling a bit under the weather, so that's not good either. I'm hoping it's just, something.
Well, I know
light.
that's not because you drank too much scotch last night, so.
Definitely not. No, I don't drink any alcohol, so.
I know that.
That's not going to be happening.
What's coming up for the week, mate? What can we look forward to?
All right, let me share my screen. It will stop yours, that's fine. This one here. Okay, so what I'm looking at this week is GBP/JPY, and here I'm looking at a decision around this point where the price broke above the channel, tested that top of the resistance and came back. So here I will be looking to see whether the price comes back to the top of the channel to retest it to go short. Otherwise, if it pops back up above that channel, then I'll be looking for a retest and possibly going back up long to retest that top resistance. So that is what I will be looking at on GBP/JPY. At the moment, I'm not really sure where that's going to go. The next currency pair that I will be watching is USD CAD. And here we've had price close twice above that previous level of resistance. So on the 4-hourly, I will be looking for price to either come back down to that horizontal level and see if there is going to be basically just a reversal to go back up long. Otherwise, if it comes below, then I would be looking for a break below and then retest of that level. Now, this may take a little while, maybe around this point would be the best, which is probably at least a few days away. So that's sort of the time frame that I would be looking at there. But overall, that is still in an uptrend. So looking to see if that's going to stay that way or if it's going to come underneath. The next currency pair I'm looking at is Euro AUD. And Euro AUD, I'm looking on the higher time frame. It's had the double bottom, it came up, but there is a trend line that is just being touched here. So I'm looking to see, is this going to continue going up and above that with the retest there? Or is this actually going to hold same as previously and come back below? If it does come down, then I would be looking for price action below, either a double top here or a lower high, something like that, to see if then I would be looking for short opportunities there. And the last one I'm looking at this week is Euro GBP. And Euro GBP likewise has broken above that line. So now on the 4-hourly time frame, just looking for a pullback. If it comes back and retest that level, looking for long. Otherwise, if it's just a false break and comes straight back below, then I would be looking for a retest on the underneath that resistance line, and then looking for a short after that. So those are the 4 currency pairs that I'm looking at this week.
Cheers, Linka. I noticed in that lot that 3 of them are not related to the US dollar, which of course has been ruling the markets for some time. And is that on purpose, or is it just a chart thing? You're pretty much about charts, aren't you?
Yeah, I'm just technical analysis. So whatever looks good in terms of the price action, whatever's the closest, that's what I present. Because I look at 10 currency pairs, but some of them, they're nowhere near. So yeah, these are the sort of ones on my watch list that I think would come up, the soonest, I guess.
Have you got a favorite we can pin our hopes on for the week, or they're pretty much all the same?
Yeah, I'm not really sure that I have a favorite. The only thing I'm looking at is the correlation. So GBP JPY, if that goes short, then the others are in the opposite direction in terms of correlation. So then if these 3 go, then I need to manage the risk. If all of them are setting up, then reducing the risk. If anyone is planning to take all 3, that's basically going to be going, multiplying the risk in the same direction. But in terms of favorites, I don't know. I like USD CAD. It is my favorite to trade. But, I was looking at short underneath here. That didn't happen. So I'm not sure at the moment.
Yeah, look, I'm a massive fan of dollar CAD short. But it just will not set up. But that's okay.
Yeah.
One day it will, and we'll be rubbing our hands together. All right. Maybe not this week. We'll see.
Yeah.
Thank you, Linka. Have a great week
welcome.
ahead, and we'll catch up in the near future, of course.
Thank you. Have a good week too.
We'll do our best. Absolutely. All right. So let's turn our attention from currencies to indices. And we had yet another week of crashing. Well, it finished up, I suppose. They come off their lows a little bit, but the S&P 500, the NASDAQ, the gold in particular. We'll talk about that a little bit later when I do my analysis. But FTSE seems to be hanging around, Ash. How you doing, mate?
Yeah, really good, mate. Really good. The FTSE does seem to be hanging around, and it's an interesting dynamic. Lenka's talking about the pound versus the yen, and the pound plays a big part. We're talking about the dollar because the dollar really is driving everything right now. So if you want to kind of short the dollar, you have got a plethora of options to buy. You could buy gold, you could buy oil, you could buy the indices. But the interesting dynamic with the FTSE is that because the I can't share my screen. If I could get somebody to enable me to share my screen, I will show you my screen. But The interesting dynamic with the FTSE is that because the currency that the index is connected to plays a part in whether an index is going to do well or not. If you were to look at the FTSE, with the pound so weak, the FTSE could well do okay out of it because of the spread differential between the pound and the other currencies. And what we're starting to see happen is that market participants and investors are starting to come over to the FTSE, switching positions out of things like the NASDAQ and the S&P into the FTSE 100, as they have done with the Russell 2000 as well, because the dividend that you can receive from the FTSE is much greater right now than well, certainly that you can get from the NASDAQ. So the FTSE becomes a really interesting index, and actually as a spread trade, it is perfect right now. FTSE long, NASDAQ short. But as you quite rightly said, things are turning. Now, what I find interesting about the FTSE is that this really is still a higher low. So we've got this higher high here. So if this was an area of resistance that it was unable to get through, then it started to burst to the upside, come down, and it's still managed to hold this position right now, creating that higher low and potentially taking us much higher. Now, what I want to see with the FTSE is a certain certain other products doing relatively well alongside it, and that would give me more confidence that the FTSE is going to actually rally. So if I look at the NASDAQ to start with, the NASDAQ's a pretty good measure of risk in the market because of the way the NASDAQ is built up of companies that are growth companies rather than dividend-paying companies. And if we look at the NASDAQ, it's right at the lower end of the pattern. So drawing a trend line from this low here and then going right to this low here, what we actually see with the NASDAQ is a hold and a relatively good bar. Now, I've got the volume down here as well, because what I'd really want to see on a bar like this is a decent volume spike. And actually, we haven't really got it. You know, there's the volume that we've really got from Friday was not that much higher than the rest of the volume over here. You know, I'm looking at the 90 days here. And we discussed this on Thursday, Geoff, about the time frame sort of volume. I actually quite like. I was looking at the 60-day, but I had a little play with the 90-day, and I prefer the 90-day because it is a quarter of data. So the volume doesn't really. It's not really spiking here. It's not really going anywhere really. It's kind of it's nestling in the same place. So not an amazing battle to kind of get a firm grip on whether this is going to be a hold line or whether it's going to continue to the downside right now. And it will come down to Thursday. But if this is able to get to start to rally to the upside, the FTSE is likely to do the same. And again, the volume's not particularly telling down here, but the FTSE is likely to do the same and start moving up. So I'd like to see the NASDAQ holding at minimum to want to buy the FTSE. I want to see oil do well as well. And the reason that I want to see oil do well is that the FTSE is very, very connected, is extremely well connected to the business cycle. And the business cycle really is about defining whether we're in growth or whether we're in contraction. And oil, of course, is the best products probably that we got on MT4 to tell us whether we are in growth or contraction, because the more growth you have, the more commodities are used. So oil would be one of the two major stocks on the FTSE is BP and Shell. So if oil starts to go higher, then BP and Shell will tend to do well as well. And they have held on very, very convincingly, BP and Shell, while the market's been coming down. They've managed to hold ground pretty well. Is oil turning around here? Inverted head and shoulders. Also a higher low here. We haven't got the higher high, but we do have this inverted head and shoulders. So if oil can start to boost its way to the upside, that's going to play into the FTSE's hands. That may well come down to some dollar weakness. It may well come down to some global growth rather than global contraction. So there's a few things to kind of pay attention to here, but I don't want to see oil coming down. I don't want to see the NASDAQ or the S&P coming down. And if I don't see those things, then I will be quite happy to buy the FTSE. And this is where the interesting dynamic where the FTSE comes into play. Dollar strength means pound weakness. Pound weakness could mean FTSE buy. Dollar weakness means index and commodity strength. Index and commodity strength could be a FTSE buy. So the FTSE is actually in quite an interesting position when you come down to the dynamic of the of global equities and of products that are on offer. So the weight really is in the FTSE's favour in whichever way you look at it. What we can't have is the dollar strength pushing oil down while also pushing the power, but while also pushing the pound down. So these markets really have to be looked at. So I'll look at the pound dollar, I'll look at the oil market, and I'll look at the other indexes to kind of see if I can get a firm grip of what to do. As you rightly said, the FTSE 100 is closed tomorrow. So what will happen is on Tuesday, we will see oil, we'll see the dollar, and we'll see the S&P and the NASDAQ either hold or give way. If they've managed to hold, then it might suggest that we're going to be buying up into that into those rate decisions. And the Bank of England may only go 0.5%. You know, this is the other interesting thing. The Bank of England have really been the only, in my opinion, honest central bank coming out and saying, look, the recession's here, it's coming. So they are much more likely to be maybe just a little bit softer with their interest rate hikes, particularly now you've got a new government in place. So if they go to 75 basis points, that could change the dynamic. But there's a chance, maybe slim, but there is a chance that they stick at 50 basis points, and that would probably boost the FTSE 100.
Yeah, look, it's going to be an interesting week, and I think we'll probably see a bit of toing and froing as, although on the dollar, you've probably got to expect that the market has already priced in a 75 basis point rise.
It absolutely has. It absolutely has.
And
what it hasn't yet priced in is the 100 basis point move, and that is on that's also on the table right now.
Yeah, that was my next point. And what happens if they do? I mean, traditionally, you would think that that's going to mean a strong dollar. And of course, it's on a tear, right? It's just so strong at the moment for reasons that most people would say the Fed are responsible for. That will change one day. We all kind of have that same feeling. But for now, it's really hard to swim against that really strong tide. Really,
it is,
really
mate.
difficult.
Nothing helped last week. You know what investors were looking for is inflation data to start saying actually it is leveling off. You know, so the retail. So what we had was almost the perfect storm against investors speculating on the fact that the Fed are about to at least pause their interest rate hikes. We had higher inflation numbers, or at least higher than expected inflation numbers, which puts the ball back in the Fed's court to at least continue on their path. Then we had good retail numbers and a labour market which is still relatively strong. So they're in this position where they're like, well, the economy's doing okay. So you know, we're not damaging it by raising interest rates, and inflation's going higher, and we've got to battle that inflation. So let's keep going. And as I say, the question really comes in is we've priced in that 75 basis point rise, but we haven't yet priced in 100 basis points. Will they go hard and front load it again? And I think we're again sort of, you know, to a degree data dependent, but really it's kind of D-Day now, isn't it? So the decision will be made. I think it probably will be 75 basis points. I think the inflation numbers at least weren't spiking again. So they might just stay on this path and see if they can get it under control a little bit more gently than the aggressive 100 basis point rate hike. And then it's what everybody else does. You know, we've seen the euro rally off the back of some hawkish comments from the ECB, but the eurozone's in terrible trouble. The pound, the UK is in terrible trouble economically. It's in a terrible state, which is why we might see a 50 basis point rate hike, which is the same as 0.5%. Just for anybody that doesn't know, 0.5% is the same as 50 basis points. So you might see a 50 basis point rate hike rather than 75. What does that do to the pound? Doesn't help it out much. So we might see the pound, you know.
Everyone else is going harder. So, yeah.
Yeah.
In terms of differentials, it means nothing. If anything, it's probably worse.
Yeah, absolutely, mate. There's some concern, and we've seen the yen rally. We saw the Swissy rally as well for the first part of the week. Interesting that it didn't sort of carry on, but we did see the Swissy rally for the first part of the week. So that it suggests nervousness that is kind of permeating through. If they stay on this path, is it the right time to get into stocks? A lot of people are calling the bottom, but I don't know why. I don't know where they're getting their idea that this is the market low. And if you look at the people that are saying it, it's kind of all the people that own funds, so they need investment. So the JP Morgan will come out and say, yeah, we're near the market bottom, but it's like, do you believe that, or are you just trying to make people, are you continuing to try and get people to invest? So you have to be very careful when you're listening to, what's been said, and who's saying it. And what their motivation may well be for saying what they're saying. And I think all we can really do is go on the hard data. And the hard data right now is suggesting that the relief is minute. It's a minuscule relief that's going on. So it's not really the time to be calling a market bottom, even though it may well be in. I think it's too early for us to say with any real confidence that that's the case.
Yeah, it's interesting. I'm seeing all sorts of things in my Facebook feed at the moment because I'm in this financial market. I get all sorts and manner of things, as I'm sure you would as well. And anybody who's ever Googled something to do with trading or financial markets, they're coming out of the woodwork at the moment, right? All these, let me do it right for you people. Making $7,000 a month and all this sort of crap that you read. And it's because, in my opinion, they do feel, or somebody's saying that, as you just said, the market may well be at its bottom. And I, like you, disagree with that wholeheartedly. But really, they're coming out because they know eventually it will turn and they're going to be right. So they're going to be right for once in their life. That the market does turn. So all of these educational people who are coming out at the moment, I treat them with a bar of salt.
Mate, that's one of the reasons I got rid of Facebook. For that very reason.
Yeah.
Like every year there's a new Judas, and that's really what we've got. We sort of like every single year there's just a whole bunch of people that come out and say, I've done 7,000 and whatever in a month, and just romance people to kind of go in and experiment in currencies in the stock market. But as you and I know, it takes more than a week's training to kind of get a handle on this stuff, and it's a real shame. It's a real shame that we've got we got this faction in the industry, but. I don't think anybody here is I'm not going to use the word stupid, but naive enough to kind of believe that that's the way that you make money in this market. Because you just be professional and you'll be absolutely fine.
Yep, it's a business. It's not a gamble. Simple as that. One thing I want to ask you before you go, because we won't be together tomorrow. There is no trading buddies due to the funeral, of course.
Yeah.
I don't know if you've done your analysis on the currencies yet, but. Lenka had a chart up on pound yen. I'll be putting that up in a minute myself. Can the yen actually sustain a rally?
Only if there is any kind of idea that the BOJ are going to do something. And right now there's not. The BOJ they've held firm. What do you know what's really interesting about the yen? I mean, the yen's trade balance is atrocious. We're not looking at the same dynamic of a currency that we used to historically, where it would be a genuine safe haven because they had, decent trade balances going on. The Japanese economy is not what it was. But what's interesting is that every time there's a little meeting that goes on between the officials over there, then everybody's like, it's going to happen. It's going to happen. They're about to kind of change stance. So people start buying the yen. But these kind of supposed closed door meetings are just people are kind of putting cups up to the wall and seeing if they can figure out what's being said. But the only thing about the yen, the answer is yes in a way, but it will be yes because they have to, not yes because they want to. How can they possibly sustain the currency as weak as it is? They really can't. And this is exactly what we saw with the ECB. The ECB didn't want to move, but they didn't have a choice. Everybody around them was moving. So you can't be left where you are. And as I say, if your trade balances, which this is really about, right? This is if they are lowering their interest rate, the idea is that they sell more goods and services because they've got a cheaper currency than everybody else, and they can be very, very competitive. But if your trade balances aren't really reflecting that, then something's wrong. Something is fundamentally wrong with the structure of.
You've got to rethink, haven't you?
You've got to rethink, yeah. So eventually you sort of like go, you know what, we can't beat them. Maybe it's time to join them. And the ECB have moved. So can the dollar go to 4% while the yen's still in negative territory? I mean, it's questionable, isn't it? So eventually, mate, you're going to make a whole bunch of money out of that one. But I don't know when you pick it. I really don't.
Yeah,
I mean, do you speculate now? Because you'll be too late by the time it sort of happens.
I'm about to tell you why I think it's maybe possible for a short period of time, and I'll just stick with that. Thank you, buddy. As I say, no show tomorrow for Trading Buddies. We'll catch up with you on Thursday, and have a great week.
You too, buddy. I will see you soon. See you, Lenka.
Okay, so here's what I want to share with you about the yen pairs, and it's very much a case of how the heck can you just trade it on a 1 bar reversal. And my weekly reversal bars are really a directional bias rather than a trade. So I certainly don't want to be trading this reversal bar underneath here with a stop loss here, though I think it's entirely possible that by the end of the week price will be down at this trade line. I think that's entirely possible. But again, how do you put your faith in the yen? So I don't think that Aussie yen is the best pair to trade short, but I do think ultimately we are going to see this come back to this level. I can't trade that bar as is, but I certainly can if I get another lower high. I do like this rally, retrace, rally, retrace, rally. So we really are looking for retracement here at the end of the day. So I get it. I totally get that this bar could mean that we're going down here straight away. I like my 3 amigos sitting there. They suggest that this range will break to the low side, and maybe that low side is a retest of that breakout level, maybe. But like I said, I'm not going to trade it per se. 2 others I want to look at, or maybe even 3 others I want to look at. One is euro yen. Now you'd be, if anything, you'd be tempted to say that the euro is one of the weakest currencies on the board, and for obvious reason has been for some time. Yet against the yen, it is rallying and has been also for some time, like years. Is this now the time on a weekly chart again that we've got this game changer bar that I call them? And again, rally, retrace, rally, retrace, rally. We're looking for retrace probably at this point. So I could actually be talked into trading euro yen short if I could have any sort of confidence in the yen. Hence, I asked Ash, is there any reason? Because I know he's all over that sort of stuff. So I'd be waiting yet again for a lower high before I jumped into euro yen. Pound yen, as Lenka looked at, is also very interesting, and probably more interesting than the 2 I've just shown you. Why? Because we've got a clear double top sitting here, and we've now had a retracement on all of this bullish price momentum, and now we have a clear potential. I'll call it a clear lower high. In my humble opinion, that is going to be a lower high. Now, we've also got a potential false break of this trend line. If I go to the daily chart, I'm waiting on only one thing, and that's a pullback to that area. If I got a pullback to that area on Monday or Tuesday, I would certainly look to trade this short. But that's the key component. I have to have a bullish bar here to be able to trade it short, because that gives me the insurance that I need to say that if this momentum is to continue, it will continue underneath the bull bar. And if the yen can't sustain a rally, then obviously this will take off again and I won't be involved. But I do like this more than I like anything else in terms of the yen, apart from one other. and that is Kiwi yen. So Kiwi yen, very, very similar story, yet it hasn't really set up the same as pound yen yet. It's come off the top, and you can see that's a very, very clear top. I call that Bart Simpson's hairdo, and it's a game changer bar this week. Brave to take it, like all the others, but again, it's not a trading bar for me. It's a directional bias bar for me. So I'll be looking for, and it is similar in many, actually I've got a chart of that down here somewhere, I'll show you. It is similar in many, many ways, but I can even trade this bar on a daily chart. So it's similar to what I just asked for on pound yen, right? It has already come back underneath this level, this trade line, and it has retested it. Barring a gap down tomorrow morning, I will look to place an order here short underneath that bar and a stop loss. I'll get well above that trade line. Daily pivot won't be there, of course. Actually, it won't be too far away, I don't think. Yeah, I'd probably want a stop loss above this high here, which could eventually become a right shoulder of a head and shoulder. So that's where I'd put my stop loss. But my entry would be, 4 or 5 pips underneath that bar, barring, as I said, a gap in the market that, closes down here somewhere. Wouldn't be interested if that's the case. Got to have price up here before I would enter that position. But I think that's probably 2 positions. And again, it's very, very difficult to trust the yen, but they're the 2 positions that I would prefer to take. I also want to talk about gold before we leave you today. And the reason I want to talk to you about gold is because it has cracked through a very, very, very important level. And that level is right here. It's 1680-ish. Let's call it 1680. But this looks now to be in a bit of strife. I mean, it has been for quite some time. This is 1, 2, 3, 4, 5, the 6th month of selling gold versus the US dollar. But finally, it has cracked the neckline of this double top. And that to me is very, very important. That's the monthly chart, of course. The weekly showing the close below that level that I have nominated as the neckline. And the daily is showing me a break and retest of that exact area. Once again, given there is no gap in the market tomorrow, that upsets my plan here. I will be placing an order short underneath this bar, and I'll put my stop loss pretty much above it. I've been waiting on this for a long, long time, frankly, and I just can't not see, as I keep saying, I can't not see that double top. That is really the big boss at the moment. And now we've got a crack below here. And if you have a look at this, the weekly chart, really it's pretty clear. You've got a lower high, a lower low, a lower high, a lower low, a lower high. It's a trend, isn't it? Pretty strong one too, I would have thought. So I am a bear on gold, have been for quite some time. And the daily chart is going to give me an opportunity to get into that. If Thursday comes around and we're not in that trade, or prices come back up here, it makes it a little bit more difficult. Then I would look for a false break of resistance and still look to trade it short, because that means something to me, the fact that it's broken below that neckline. So I am a gold fan, more an anti-gold fan at the moment. I don't think that will continue forever. And I think a reasonable hedge on that might well be, goodness me, that looks like a template that is not mine. Let me try that again. There we go. I think a reasonable hedge on that, if you thought gold can rally, would be gold versus the euro. Now, that has not, to my mind, breached, we'll call that the neckline if you want. Neckline it isn't, but it's certainly the strongest level on the chart here of support. And it's kind of bounced off that again on Friday. There's a little bit of a cloud of a price, of course. But I think if you're more a fan of gold, I'd be rather trading it against the euro long than I would against the dollar, certainly at this point in time. So that makes sense to me if you want to hedge, and you do go short gold versus the dollar. This might be a good hedge against that, but you need to have that safety zone again before you get in the market. So gaps will be all important tomorrow morning, and I'll be looking at them very, very closely. Okay, so big week ahead in terms of Thursday. It's a super Thursday with 4 central banks announcing their monetary policy. That will carry us through for the next little bit. And I think you can expect some volatility around all of that on Thursday. So if you do get in the market with any one of those central banks in your trade, make sure you get safe. Thanks, Lenka, for your input. Thanks, of course, to Ash, who's ducked off to have his Sunday. And thank you all for being part of the weekly Sunday market update. We hope you have a great week ahead. Trade safely, and bye-bye for now. See ya.